Welcome to The Explainer. Today, we're going to dig into a really fascinating story in the tech world, and it's all about ServiceNow. They just reported what looked like blockbuster earnings, but then their stock immediately fell. So we're going to break down the real story behind those numbers.
Okay, so let's get right into this puzzle. It's January 28th, 2026, and ServiceNow drops its Q4 results. Now, on the surface, everything looked incredible, and yet the market's reaction? The stock tanked, down over 10%. So what in the world did Wall Street see that spooked them so badly? First, let's just look at how good the numbers really were.
First up, earnings per share. The experts were looking for 89 cents. ServiceNow came in and delivered 92 cents. I mean, that's a solid beat, no question about it.
And it wasn't just earnings. They also crushed it on revenue, bringing in almost $40 million more than anybody predicted. Again, a really strong signal. And you know, this wasn't some fluke quarter. We're talking impressive year-over-year revenue growth of nearly 21%. In this kind of economy, that kind of growth is just a huge win.
So you've got this great report, beating on earnings, beating on revenue, fantastic growth, and the stock drops? It just doesn't add up, right? So what was really going on in the minds of investors?
Well, what's so interesting is that on the earnings call, the CEO, Bill McDermott, he didn't run from this. He decided to tackle what he called speculation with hard facts, and he started with the #1 fear that's hanging over pretty much all enterprise software companies today. You see, the big worry in the market right now is that these powerful new AI models are just going to make traditional enterprise software totally obsolete. But ServiceNow's whole argument is that the exact opposite is true. They believe AI actually makes what they do more essential, not less.
And this right here, this gets to the absolute core of their entire strategy. See, AI is probabilistic. It's amazing at making predictions, but it can be uncertain. Workflows, the things that actually run a business, they have to be deterministic. They need to be predictable, reliable, and follow the rules every single time. As they say, you can't run a global supply chain on a maybe. And ServiceNow says they provide that crucial, deterministic layer that takes all that AI intelligence and turns it into reliable action. So instead of AI being this big, scary threat that's going to eat their business for lunch, ServiceNow is making the case, with actual numbers, that it's a massive tailwind, that it's actually pushing them forward, faster. And here's the proof in the pudding. Their new suite of AI products, which they call Now Assist, has already just rocketed past $600 million in annual contract value. For a brand new product line, that is a huge number that blew away all expectations.
And get this, the momentum is just building. In Q4, AI revenue didn't just grow, it doubled year over year. And they're not just closing small deals, they're closing huge million-dollar-plus AI deals at a rate that's nearly triple what they did the quarter before. The whole platform is clearly on fire. Okay, let's move to the next big market fear, because this all connects. Some investors were also getting worried that a whole string of recent acquisitions was a sign of desperation, that the company was just trying to buy growth.
The word on the street, the speculation, was that ServiceNow's organic growth was starting to slow down, so they had to go out and just buy other companies to keep their revenue numbers looking good.
But McDermott's response to this? It was forceful. He stated very clearly that they have never bought a company just for its revenue. He said their M&A strategy is all about strategically expanding their total addressable market, or TAM, which really is just the entire universe of customers they could possibly sell to, especially in huge new areas like security.
And here's where it all clicks together. These acquisitions, they weren't random at all. They actually form this unique, three-layer solution to a massive problem. How do you secure a company in the age of AI? So you've got Armis giving visibility into every device, Veza mapping out who has access to what, and then ServiceNow at the top, orchestrating the whole automated response. It's a really comprehensive security strategy.
But look, you can talk strategy and acquisitions all day long. The ultimate rebuttal to any market fear is customer success. The proof is in the pudding, right? Are customers actually getting value? Well, the results here are pretty dramatic.
So take one of Europe's largest drugstore chains. By using ServiceNow's AI tools, they slash the time it takes to solve a customer's problem from 9 minutes all the way down to just 30 seconds. I mean, think about that. That is a massive gain in efficiency. Or how about this one? A major consumer services company in the US used the platform to completely flip its support model. They went from 80% of issues being handled by humans to 80% being automated. And in the process, they generated a staggering 400% return on their investment.
And the stories just keep on coming.
across every industry you can think of. A telecom company cut costs by 30%. An insurance company saved its agents 12% of their time. A real estate firm saw over 100% ROI. This is the tangible, real-world proof that the platform is delivering huge business value.
So all of this, the AI strategy, the smart security acquisitions, the incredible customer ROI, it's all building towards a very, very ambitious long-term vision that McDermott laid out.
And he could not have been more direct about it. He came right out and said, this is a $1 trillion company in the making. And then he added, that's not speculation, it's a fact. That's a bold statement. So what's the big takeaway here? Well, while tons of companies are in this frantic race to build the next great AI model, ServiceNow is positioning itself completely differently. They're betting that in the AI gold rush, the real money is made by selling the picks and shovels, the essential workflows, the governance, and the security that makes it all actually work inside a real business. Which really leaves us with this final big question. Was the market's one-day panic just a mistake? Are we watching right now as this company methodically builds the essential, undisputed operating system for business in the 21st century? It sure seems like that's the story the facts are telling.